So it's a rapid.
Wide awake while the world is sound asleep, and too afraid of what might show up while you're dreaming. Nobody sees you. Nobody will believe you. Every day you try to pick up all the pieces, all the memories that somehow never leave you. Nobody sees you. Nobody will believe you. God only knows what you've been through. God only knows what they say about you. God only knows how it's killing you. But there's a kind of love that God only knows. God only knows what you've been through. God only knows what they say about you.
Good afternoon, Emini Nation.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork, From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Thursday, 9th day of May, 2019. Thanks so much for joining us, whoever you are, wherever you are. But we're just glad to have you here, right now. If you cannot see the charts, which I'm about to put up on the screen, go to our homepage at CFRN.net. On the right-hand side of the page, you'll find a big microphone. Click it, follow the instructions. In 30 seconds, you'll be registered. That gives you one-click access to the show each and every day. Now, there will be days, right? There will be days you find yourself away from the office, away from the desktop, working off that flip phone. Now, how about a smartphone, all right? What to do? Our friends have made it simple. Go to youtube.com/CFRN/live during the live broadcast, and there you will find our real-time simulcast brought to you by the good folks at YouTube. Thanks, YouTube. All right. You see the chart. And you see that trend line running. Where'd that come from? What's that all about? I think you know. Let's take a look. Let's zoom in. Zoom in and scrunch up. Work it. Where's my line? No. No. Say it ain't so. You see that? Okay, now here's the megaphone pattern. We took out the megaphone pattern. We hit it yesterday at 2864. And then we took it out again today, right in that same area. Push through it. You can see it. Leg, retrace, leg, retrace, leg. Right down through the lowest weekly trading zone. That's it. That's the bottom rung on the ladder for the S&P 500 Emini Futures, 2854/55. Okay. Now, yesterday, as we started this descending price channel, threw a little trend line up here, which allowed us to do this. Well, I'm sorry. This goes back to May 6th. That was 3 days ago. But we were able to draw it on the 7th, 2 days ago. You get the point. So by connecting these two and creating this trend line, we're able to create a duplicate of this trend line, which by duplicate I mean it's at the exact same angle. So we pulled it over here, and we could position that also on the 7th, you see, with me, right? Price tried to get back to that upper trend line, upper part of the channel, but it could only go as high as the weekly trading zone at 2897/98, where it found, in fact, good resistance. Took out this little trend line right here, and here we are, knocking on outside of the megaphone. Remember, we said we could stay in that thing for days, weeks, months, because it's a monster. It's huge. Look at that. And it gets bigger by the day. We're outside of it, okay? And we should pull back up. We should give one more good test and run at that thing, and we'll see what happens. Could we still pop back inside? Well, the moves are a bit exaggerated right now. The average true range per candle on a 30-minute chart, well, check it out. See for yourself, okay? Or you can look down here. See it? All right, I'll show it to you later. because we got to move quick because Michael has to be somewhere in just a minute. So I'm going to give you the numbers from around the world. I got a little bit of news for you. I'll tell you about that when I come back. Right now, as it stands, cash market in the U.S., the Dow is currently down 351 points. That's 1.25%. NASDAQ down 95, 1.25%. S&P 500 down 30, a little over 1%. And the Russell 2000 down 16, 1%. In the commodity basket, crude oil down 78 cents, trading 61.34 last. That's 1.25%. Gold, on the other hand, up $5.20, trading 1286.60 last. In the Asian markets, at the close, the Nikkei was down 200 points, 1%. Shanghai was down 42, and for the Shanghai, that's 1.5%. And for the Hang Seng, 2 big days back to back, at the close, down 692 points. That's well over 2%. In the European markets, color of the day continues. Gold, the only green spot on my chart. The FTSE finished the session down almost 1%. It lost 63 points. The DAX lost 206, and for the DAX, that's 1.75%. And the CAC finished the session down 104 points. That's 2%. That makes it a red day in Asia, a red day in the UK, and it looks like a red day is here to stay in the US of A. There you have it, numbers from around the world. I'll be back in a moment with just a little bit of news, and here's Michael with a recap of everything that happened in the live training room today.
Okay, I am ready. Here we go. Bring it over here. Bring it on home.
Bring it.
There you go. You should be looking at my screen of the home page.
In fact, we are.
Excellent.
All right, it's all yours.
Thank you. I will get started. All right, good afternoon, everyone. Today is Thursday, the 9th day of May 2019. This, you can see, is the homepage at CFRN.net. If you've not taken a free trial with us, go to the homepage. Right over here in the right-hand column, it says 5-day free trial, applied.cfrn.net. If you click on that, you will be brought to this page. Where all we ask for is your email, your first name, and how you found us. Hit the submit button. Once you hit that submit button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. Okay, that is definitely imperative. Now, today we had a pretty good day again today. If you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 9th day of May 2019. Today we made 16 ticks in the euro, 4 ticks in crude, and 15 ticks on the ES. That put us at plus $327.50 this morning. Today it took 29 minutes and 3 trades to get to the goal for the day. At that point, we're up 167.50, and we took a total of 12 trades. So there was a lot of trading going on this morning, and I missed a bunch. You guys will see it in a few minutes. But on the month now, we're at $1,217. That's over 7 days, averaging 173 per day. And on the year, we're at 9,757. That's over 81 days, averaging 120 per day. Okay, that is one contract, 2 hours per day. One contract, 2 hours per day. Now, let me pop that down, and we'll start out with the gold. Okay, we just had break-evens on gold today, 4 of them, I think. It started out here. We missed a long trade right here. Probably would have given us some profit. We got into this one, and I moved my stop to break-even. It came back and took me out of break-even. We got into this one. I'm sorry, we missed that one. That would have given some profit. We got a break-even on that one. We missed that one. That probably would have been a break-even. And we got a break-even on this one. Okay, that was our day on gold. Now, during the break, there was a bounce off the BBC right here. That probably would have given some profit. Would have given up something. It just barely put in a higher swing. Okay. And on the euro, let's get it over here early on. Yeah, see, it was really choppy right here coming into the open of the market. And then it finally took off right in here, but it didn't pull back enough to give us a trade set up until way over here. And I missed that one. Then we took 8 ticks on this one and 8 ticks on that one. We missed that short right there, and we had a break even on that one. Okay, so we're plus 16. Since then, I was pretty much flattened out. It's starting to break down now, but it was flattened out, so you wouldn't have taken this short here off the BBC. Okay. Now, crude oil. I had highlighted this area yesterday morning, when price was, was about 80 ticks above it. I had highlighted that area. And I said, price is going to get back there. And sure enough, it did. This morning we picked up 3 ticks here. We missed that one right there. And we missed the long right there, and the short right there, and the long right there. And we picked up 1 tick right here to give us plus 4 in the morning. Yeah, this was right at the break. There was a shorting opportunity off the BBC right there to capture that leg down at the break. Then it changed directions, and it gave a long off the BBC right here for that leg up. Would have been a momentum long trade right here, probably break even, and nothing else since then. Okay, but watch this area for the rest of this week. This area is going to be significant, 27-28 area. Okay. All right. On the ES, we missed a bunch of things on the ES today. It turned out. I mean, we got a bunch too, but well, we got 2, but we missed a bunch. Let's see, it's scrolling. All right, so it started out going down to the zone. Then we missed a short right here that was nice momentum short trade right there that we missed. We did get into this one over here. We picked up 11 ticks on this. This is where we got our goal for the day. We picked up 11 ticks on that one. And we missed a short right there. We picked up another 4 ticks right here on this short. And we missed that follow-up short right there. And it got really choppy for a while. For like, I don't know, half hour or so. It got really choppy. Let's see. Yeah, a couple more trades we missed in here. Both profitable. Another one here. Probably would have been a break even. Then we started getting into the break here. Let's see. During the break, we would have had a long right there to capture that. Then it flipped around and it gave a short right here off the BBC. And it flipped around again. That was trying to get up to the weekly trading zone, which is right up here. I believe that is the lowest weekly trading zone we have as well. But it bounced right here, gave a long, and then another long right there. Now, I wouldn't do anything that's that close to the weekly trading zone. It's got to have at least 2 points between the entry point and the zone for me. So any entry would have to be below 28.52. Okay, 28.52 or lower. But that was it. We ended up with 15 ticks on the ES. Okay, so we'll go back here. Today's the 9th day of May 2019. Made 16 on the euro, 4 on crude, and 15 on the ES. Put us at plus 327.50 on the morning session. Took 29 minutes and 3 trades to get to the goal for the day. At that point, 167.50, and we took a total of 12 trades today. So on the month now, we're at $1,217. That's over 7 days, averaging 173 per day. And on the year, we are at $9,757. That's over 81 days, averaging 120 per day. 120 per day. Okay. Again, if you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. If you have not taken a free trial with us, come to the homepage here at CFRN.net. It's right here in the right-hand column. It says 5-day free trial. Click on the apply.cfrn.net. Once you do that, you'll be sent a confirmation link. Oh, actually, no. Once you do that, you'll be sent to this page. You put in your email, your first name, and how you found us, hit the submit button, and then you'll be sent a confirmation link. Okay? And at that point, you have to just click on the confirmation link, and we will know that you took the free trial. Yeah. This, oh, can somebody type something in for me? Just type in a Y or something like that, so I can post a link to Bert's meeting, because Bert's doing a meeting this afternoon at 2 p.m. Thank you, Tim and Brett. Bert's doing a meeting this afternoon at 2 p.m. and this is the link to it. Okay. I'll hit send to all. Okay. And that's it. With that, we can pass it back out to fabulous Phoenix, Arizona. Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
We are ready.
Excellent.
It's the empirical we.
The empirical we, yes.
Okay.
Oops.
There's part of it.
Okay.
And there's the rest of it. Hey, today's Dr. Tom Day. We're going to talk about leaps. Not leap year, but leaps. Michael, do you want to share what a leap is?
Yeah, it's a long-term option, is what it is. A leap. I don't know what the acronym actually stands for.
I'm standing here trying to figure it out.
But it's a long expiration something. I don't know. I don't know what the acronym stands for. Dr. Tom will have it all.
He will.
Have it all in
at the top of the
Word
hour.
document. Yep. He's going to be here at the top. Okay.
John will be here at the bottom, in theory, and Dr. Tom will definitely be here at the top.
Okay. Let me just figure it out. Leap. Ballerina.
Somebody may have put it in the chat box already. Nope.
Nope.
Wow. Okay, good general information for all to know. This question came up this morning in the discussion group. The question was, will we be rolling forward contracts by Monday? No. Contract rollover occurs on the Thursday, 8 calendar days before the expiration Friday. For the E-minis, that's the second Thursday of March, June, September, and December. That's a good thing to make a note of and put it in your little book, whatever that is. And, how pressed are you for time?
I'm actually pretty pressed. I can stay a few more minutes, but I gotta run an errand before I start the next meeting at 1. But what's going on?
I do not.
I've never learned these Tuesday trades. Okay, David. Let me give you a link to get to the Tuesday trades. It is right here. View channel info. Copy link. There we go. Paste link. There, I'll just hit send all. Anybody that wants to go learn about the Tuesday trades and the Tuesday meetings, you can just go there to that link in Telegram and watch them. That link is open to the public. Okay.
Okay. Now, you may have heard me mention that on Wednesdays, I go to the Ranch Market, which is our local Hispanic market. We have a number of those throughout the Valley of the Sun. They have a very special offer on Wednesdays. It used to be $5, now it's $6. You get a chicken that's been cooked outdoors on the grill, you get a big stack of tortillas, and you get a nice cup of green salsa. It's outstanding. They've raised the price to $6, but the good news is you can still get 2 for $10, which takes you right back to the $5 price. So imagine my surprise as my daughter and I are walking into the Ranch Market yesterday afternoon, just prior to the Crypto Portfolio Builders webinar that we had last night, and I'll give you all links to that video. I walk in, I glance to my right, for some unknown reason. You've all seen this machine, the Coinstar, where you can take your piggy bank and pour the coins into the trough there. It will count your change for you, and without ever having to dirty your hands, bang, you've turned that change into folding money. But look what it says on the screen here. Buy Bitcoin here. Right from the Coinstar machine at the ranch market. This is a true story. I couldn't make this up.
That is interesting.
And I kid you not about these $5 chickens. I thought I might be able to spot the sign. Right over there, that's where you get the chickens on the far right side of the picture. See? So good.
Mm-hmm.
So good. Okay. All right, Michael, I know you got to run, so I'll take over here and
Okay,
I'll
and
carry on.
I'm just scheduling that next meeting right now.
Mr. John in?
Not yet. He wasn't. Nope, he's still not.
Okay, that's fine.
Okay.
Lots to talk about. So, here we go. All right, guys, the chart I have up. All right, Michael, take care. See you tonight.
Okay. All right. Yep. See you tonight.
All right, S&P 500 E-mini futures. Now, there are times when the market does what your narrative says is the next high probability thing. Sometimes not so much. Sometimes it seems to want to buck the trend a little bit. Looking at this chart, you can see, by the way, we're back in that flow. Okay, we've been out of the flow for a bit, and last night we jumped back into the flow. It's a leg and a retracement, and a leg and a retracement, a leg and a retracement, right back up to the weekly trading zone. Bang, we took out the bottom of that megaphone. We've hit the bottom of this descending price channel. We're popping back up. Guess where? It looks like it, right? Looks like the next high probability thing. Yeah, we'll see how that pans out. Now, let me show you a couple high probability things. And we're going to drop this to it. Now, these are this week's weekly trading zones. We just went back above this week's lowest weekly trading zone. Okay. All right. I'm going to put this on 5 minute for a minute. Remember, what we do, our indicators, our methodology, it's fluid across all markets and all time frames. And you won't find a lot of that out there. Not bragging, just saying. Okay. Are we in position yet? Not quite. We will be here in a second. All right. Let me go to my trusty Telegram, where I will discern this. Okay. Last night, now this, it says 5:56 p.m. because it's the Telegram reads the clock on your computer. Okay, so because I'm on Pacific time, it says 5:56. If you're on the East Coast, your Telegram, your Logic 247 channel, says 8:56. Okay, so we know that this went out during the 2030 candle last night, Eastern. So let's go find 2030. And open this up a little bit so everybody can see it. There we go. All right. So what I say, 20. Oh, actually, this went out because this is a 5-minute chart, and because that went out at 8:56 p.m. That would be the 2055 candle. Which takes us back right there. Right there, that little guy. Let's highlight the little guy. I missed it, didn't I? Is it this one? Oh, yeah, it's that one. Stay with me. Okay. All right. So it was on that little guy. Now, flew it across all markets, all time frames. If the current ESM9 pullback reaches 2880, consider being short 2876 to 2874 to 2870. Trail if the opportunity presents. Okay? All right. So, this pullback. The swing high of this pullback, you see this? 2880.75. So does that qualify? It does. 76 to 74 to 70, and then trail if possible. Okay. We find 76 right about here. No, more like here. Let's see. The chart's lagging just a little bit. Okay, so we get the picture. That's 2876. Come on now. Boy, this lag, must be a lot of volume churning. And my charts are sticking. Okay, so again, the premise of the alert, if price pulls back to 2880, it did, hit 2880.75. Consider being short 2876, down to 2874, down to 2870. And the swing low was 2867.75. Now that was the swing low of this move, this part of the move. Okay. Now, the close of this green candle is 2871.50. We had a target of 2870. That's an exit signal on a 5-minute chart. But we're going to look at something else here in just a minute, so hang on. Now, important prices, important areas are almost always tested, right? So we get this beautiful 6-point leg. We get a retracement. Come on, give me a pop-up. There you go. The swing high, 2876.25. So that means we can take this. We can stretch it over here. And it's got to be at 2876. Wow, my charts really are lagging a bit. All right, see, too much. All right, that should be one tick right there. You get the point, 2876. All right, important prices, important areas, almost always tested. down through 74, back down to 70. Another 6-point move, same alert. And we put in a swing low at 58. So from 76 to 58, 18 points. This pullback, they didn't quite make it back to 76, but we did make it back to 28.70, which was the final target over here. Important prices, important areas are almost always tested, right? Okay, now let's go back 30-minute for a second. Okay, right here, this is where we were. You with me? Okay. Leg and a retracement, a leg and a retracement, and then the leg. Question is was that the leg? Was that the final leg of this sell-off? Well, that's, as they say, unknowable. What's the next high probability thing from here? Could the market rush up? As we discussed, kiss the bottom of this trend line? Sure could. And the fact that, you see where the bearish cross took place for this monster leg that took us from 28.80 down to 28.40, 40-point move. See where the bearish cross was right here? Can you see price? Now, is that the highest probability thing? No, it's certainly a possible thing. And on this big green candle, it looks like exactly what's going to happen right here, right now. Okay? And eventually will, but embrace the possibilities. Support. Support. These are 30-minute candles, 1 hour, 2 hours, 3 hours, 4 hours, 4.5 hours. And then resistance. Support, support, resistance. So this is a key area. Would we just park an order there to just sell it when it gets there? No. Why would we? When we can just wait. Patience. Remember, patience is not the ability to wait. It's how you behave while you're waiting. And in this case, it means keep your hand off the mouse, right? Let the chart do its work, okay? If price does come up to do a trader Vic and kiss the underside of this trend line, this descending price channel that I showed you a moment ago, we know how to handle that when it turns back down. If price fails at this area right here, we know what that looks like. We know how to handle it. The highest probability thing right now, right here, right now, is for this move to fail and we come back down and we test minimum this weekly trading zone, possibly these lows. Well, couldn't the low be in? It may be. It very well may be. See how we're coming off here? That was a huge bull candle, 30-minute candle. No sooner did I draw, and trust me, me drawing that on there had nothing to do with price coming off. Just saying. All right, I see John. Let's go ahead and open up his mic. I'll walk you through the rest of this. Needless to say, it was a beautiful night on Globex. It's been a beautiful morning here in Studio A. Let's go to John. John, welcome to the show. Johnny. All right, I'll just leave his mic open. You got an open mic. Okay. Now, we talked this morning in the Telegram channel. I put it in early that I thought the potential low for the session would be 28.36. Missed it by a tick. Okay. Is that me being incredibly clever? No. Is there a good reason for it? Of course. Now, let's go look at this daily chart. We're going to go from, we looked at 5 minute, and we saw how using that 5 minute chart with the trail if possible, price dropped from 28.76, that was the alert entry, to 28.40, 36 S&P points. Beautiful move. Look at this thing come off. See it? Anybody tells you support and resistance is dead, just smile and nod, you know. Yeah, maybe the more of us that know it and the more that don't, maybe the better off we are. John, that you?
Yeah, hi.
Welcome to the show.
Just listening to Trump pushing the markets up, but he just said tariffs are still going on. So we just put a sell on everything off this rally. I basically covered and reversed down near the lows this morning. Then we put rallied a bit, put a little bit of a resell, but I said if we take out the 11 o'clock highs to go long, and that captured the whole move up just now to 76.10 on the NASDAQ. And 2020, what was it, 28.70 or something on the S&P. So,
hey, did you watch the? I'm sure you probably did, but maybe not. The Florida rally that President spoke about yesterday.
Unfortunately, I didn't have a lot of things going on last night. I didn't catch most of it. No.
This guy has become the consummate performer. When he gets up and it's like he's doing a lounge act. He's so comfortable and natural seeming for him. I mean, no one else could do that. Not a Churchill, not anybody. The way he stands and turns and preens and turns a phrase and remembers everything, all these numbers. I know there's teleprompters and whatnot, but I don't know how often he actually uses or even needs those. He just does an incredible, he has such command stage presence. He didn't start out looking and acting like a president. But today when I see him speak, I don't know of anyone that ever seemed.
No, he's got the stage presence.
I don't know anyone that seems more presidential than he does right now.
He's about the greatest orator of all time because he has. See, the thing about Trump that I picked up in the he used to have a show on CNBC in the early 2000s or in the mid 2000s.
I saw him on Oprah, but I didn't know he had a show on CNBC.
Yeah, no, and he was really, the thing about Trump is he's always interesting to listen to. He's able to communicate with people in a way that's almost nobody else can, and it's easy for the working type, just a second, sorry.
Go ahead. All right, guys, here's what I was going to show you on the daily chart. Now, remember, this rally that we're in has extended from December 26th of last year up until this swing high right here on May 1st. Sell it may go away, as Garrett said yesterday. That's an old adage. Okay. Now, we initially were talking about the shallowest possible retracement for the S&P 500 Emini Futures would be back to the BBC because price always reverts to the mean. In this case, that's the BBC. Now, after that, we outlined this little area here. It was resistance. It became support. Resistance, support.
Sorry about that.
Here we are. We just traded right through it. Now, the shallowest Fibonacci price retracement, that is down at roughly 2805. You can call it 2800 if you want. We're in the process of getting a bearish cross here on the daily chart, and down on the slingshot, the cycle has dropped through the 50-yard line. Go ahead, John.
Yeah, so look, this is a pretty impressive rebound so far, and the fact that it came earlier rather than a late, an afternoon rally, is kind of constructive. I mean, look, we were down 200 on the Nasdaq. We're only down 70 now, but it's increasing. Excuse me, a little bit off this sell-off. So we'll see how much it goes back down. But it's certainly an encouraging sign to get a rally of this magnitude, where it basically takes back most of what it lost overnight, at least. And we were short, all the way down from yesterday afternoon. I had a feeling that, we had a rally. If you remember, we had a rally the day before, after hours, which we caught, and then when the market, remember we said yesterday on the show, if it takes out the lows of yesterday, forget about it. It's real trouble.
Yep.
And we pretty much started, and that late sell-off, it was about 25 to 4 or so. Something like that. Just after 3:30, it started selling off, and we put the sell out right there and then. So we actually nailed
Talking
almost
about right in.
Yeah, we almost
right
nailed
here.
the exact high.
Yeah,
right
that's
up,
great.
right there. Yesterday, yeah, right up at the top.
Yeah,
Yesterday, that's where we
stretch
got
it
it.
up.
So it's quite a good trade so far. Anyway. I've got a feeling that the metals are getting close to the turn here. Gold's actually up on the day. We just need and copper. Trump put on a what you call it, a ban on exports of metals from Iran, including copper and steel and metal, iron ore and stuff. It took a while for the market to get the memo, but it's starting to react right now. So copper is actually turning.
Our copper alert last night, John, was to be short 275.60 down to 274.60. That's a 1 penny move, $250 per contract. But the market was, in fact, most cooperative, and we put in a low down at 27.310.
Yeah.
Beautiful move in copper.
You know what? The coffee, it went down to about 88.50. It's turned around pretty strongly. The grains, boy, these grains, they're really being hammered tremendously. But maybe today is the beginning of a possible turn. If we reverse yesterday's losses, or today's losses, that would be a big deal. But the metals, there's, I think I mentioned this on the show yesterday. Somebody's come out saying there's the biggest rally in 50 years around the corner, and I
won't rule that out. I certainly won't.
Yeah.
Here's a daily chart on soybeans. I mean, how low can it go?
Exactly. It's sort of, you can see that it could be putting in some sort of a bottom here. If it can rally in the next couple of days, that would be impressive. And I wanted to point out, listen, this Roku, unbelievable. I can't remember, we got along that thing down at about 20 in the day after it went public, I think. It went public around in the high teens, 18, 19, something like that. Started going up, got along at about 21. It just hit 80. It's north of 81 today. It's really strong. And when you get a really strong move like Roku, it can certainly help a rally develop, like we just had. However, on the negative side, Google and most of the tech stocks are suffering varying degrees of down moves today. But it's interesting that if we're going to bottom, today might be the day, because Trump came out with this drug thing a minute ago, and about lowering prices, and maybe that's what the pharmaceutical sector has been worrying about, and why it's been going down a lot. And the fact that he's come out and said it today, at least it's getting a bit of a bounce off the lows. It's not positive yet. The other thing that is really an eye-opener is Stamped, STMP, stamps.com. had been an unbelievable winner. It's gone up to $300, and all of a sudden it dropped precipitously a few months ago. Just a second. Yeah, it had one huge drop, and then just a second.
Guys,
Yeah,
on
you
the
might wanna put it
soybeans,
up.
off last night's alert, this is a 17-point move at $50 per point. Go ahead, John.
A great trade. Yeah, if you can put up STMP, it's worth looking at that stock.
I will. I'll bring it up in just a half a second. Okay. Give me the symbol again. Oh, look at this gap down on the S&P cash. See this?
Yeah.
Now, guys, look where we are. We've pulled right back up to the BBC. So, yeah, get ready for the next down leg. I'm just saying, if it's coming, be ready. Okay, now.
STMP.
STMP. Whoa.
Yeah.
That's a 30-minute chart. Let's just peek at it on a daily for a second.
See, it had a crash before from upwards of. Actually, but if you can
This thing dropped from 200. It gapped $100. Look at that.
Yeah.
Now that's back on February 22nd, the day after earnings. It looks like.
Go to a weekly because I think it shows
Weekly?
even.
Okay.
Yeah, look where it came from.
The last company I owned, we used stamps.com right after they came out. I'm not talking about when they went public. I'm talking about when the whole idea that you could print your own postage. That was a very novel thing, and they were groundbreakers in that space. Well, they've got some competition now. Okay, here's the weekly. What do you want to look at?
Well, look at what happened. I mean, look at this thing was nearly $300, and then it had this drop, and now, I mean, this is this is a pretty widely held stock. It's been a very long-term winner, and it fits with my, it fits with my theory that when
they're following the business model of the U.S. Post Office.
Well, yeah, but when you get these heart attack sell-offs like this, stocks get cut in half or divided by 10. It usually means the upside in the market is limited, and you need to be very, very careful of making sure that you're not long in any kind of a downturn, because this is a scary chart, I'll tell you, because I mean, imagine something like that happening to Amazon or Google. It's already happening to Google in a minor way, and it happened to Facebook, and it's happened to to Nvidia and a few others. So what this does is, I mean, it scares the fund managers, because their portfolios suffer when these things happen. So it's definitely so you need to have very and they come out of nowhere as well. That's the other thing, when you because look at that rally, it looked like it was going to go back up, and then bang, you get cut in half. I mean, that's pretty severe.
It really is.
Yeah. So
now,
it's almost,
is there a problem?
It's almost not a good idea to hold stuff overnight, in all honesty.
So is this a result of them unable to? Are they a profitable company?
Yeah. I think they've been doing very well, but they've been guiding. Apparently, their forward guidance was what knocked them down.
Now I wonder why. Because over time, people are only going to use more postage, I would think, because there'll be more people, more postage.
I don't know. I think the post office is using less and less. It's suffering from declining revenues. I mean, it's doing okay in its package delivery and stuff like that.
Now check this out. The only relatives I have left, really, is my grandmother, back in Georgia. She's 93, 94. And then my stepmom. My dad has passed. Everybody else is gone. But anyway, my wife was saying, hey, Mother's Day, Monday, we gotta Got to get some stuff off. And so she spends a lot of time on Amazon because she's an Amazon reviewer. And you can get, let me just show you. This is pretty groundbreaking. If you've ever had to order flowers for someone to be sent somewhere else, even in your own town, it's ungodly expensive.
Yeah.
Not anymore. Thanks to Jeff Bezos. Flowers. No. Flower delivery. Amazon. Sending flowers just got very, very affordable. Okay. Amazon.com. Flower delivery. Let's see if this is the right one my wife showed me.
Yeah, I wonder why she showed that to you.
Hey, Dr. Tom. How are you?
Fine. I don't think she had an ulterior purpose in showing that to you, right?
Here's a dozen rainbow roses in a vase. Okay, that was not delivered. Okay, this one right here. This is one she showed me yesterday. This is probably what I'm going to send my grandmother. Kabloom Mother's Day Collection, bouquet of fresh white tulips with the vase, farm fresh. This is delivered from, now, I'm in Phoenix. Granny's in Thompson, Georgia. She's going to have these by Friday for $24. Jeff Bezos might be the smartest guy in the room. I don't know. Not this room, of course.
You're helping him today, boy.
I mean, and this is just the beginning here. I mean, you can get, there's some, see, I couldn't even send an overnight letter to my grandmother with a Mother's Day card in it for $20, but yet I can send her fresh white tulips, $20. Need I say more? Okay, John, what else you want to cover?
Well, the market is so strong. I think we've got to go back long here, even up to this pullback we just had, and probably, I'd probably put a just be ready because this, this is a huge rebound today. So cut the losses in half. So we've seen this, and this is what I was worrying. That I said, even though we were short last night, I said be ready for a sudden reversal because. And this is why I covered this morning, because I kind of had the sense that, with this China, if they don't put these tariffs on, if there's some kind of a agreement by Friday, and the market is kind of telling you that's coming.
I think it's midnight tonight, is it not? Isn't that the deadline?
Yeah, pretty much, yeah. Well, look. Even if the tariffs go on, they're not going to activate. It's not going to affect in-transit goods. So there's a bit of a loophole there. So
my flowers will still get there for $20. Okay.
I guess so.
All right. Look at this, John. We fill this gap higher open. It's been hanging out there on the S&P. This is on the daily chart. You can see it. We had a gap higher open on a Sunday night. We never fill that gap, which is incredibly unusual for the indices, for futures. We just closed that gap today. See that?
Yeah.
Gap closed. Next. Now we do have a gap. We do have a gap overhead, a gap lower open. It's the only gap lower open in the history of this market that has not been filled. And it will be. It just hasn't yet. Okay. What else, John? Anything else?
Yeah, the oil, the energy is going back up again too. So I think the market's looking like it's going to rally here.
Well, we're going to embrace that possibility because it very well might. I think we still got another down leg. We'll know what it looks like if it happens. We'll trade it accordingly. Gold, nice to see gold printing some green today.
Yeah. And look, the copper is really looking to me like it might have bottomed here earlier today. So I think this situation with Iran might go on for a while, and the fact that we've turned around as well, it really looks, and the copper and palladium are both turned up. If they can get the silver and gold and platinum going with them, that will be quite constructive, I think. So, and it kind of feels like that might be happening. And the gold stocks are, sometimes this is one of those very difficult turns. I've noticed this before. We've had a bottom a while back, which was a little like what's happening right now, and didn't look like a whole lot. And then all of a sudden, it turned out to be a fairly significant reversal.
We talked about this yesterday, that right here at this 50% Fibonacci retracement on the daily chart, which reaches back to, this leg up goes back to July of last year. The high was put in on February 20th. And now we're at a 50% Fibonacci retracement. We put in a little double bottom there at the 50. If we can just back up above this 38, and this was support, so it's proving to us right now that it's going to be good resistance. If we can leapfrog over that, then we have a pretty clear run up to about 1310 to 1313, which is a nice moving goal.
Yeah. No, if it takes that 1290 now is a very, very important area. If we get through that, this thing could and then 1320 is the next after that.
Sure is.
Yeah. So listen, thanks very much. Tom is on, so I'll
well, thank you, John. Enjoyed it, and I look forward to talking with you tomorrow.
Good. Likewise. Thanks very much. Bye-bye.
Bye-bye. Hey, Dr. Tom, I got something to show you. Is the doctor in? Yeah, what's up, Doc? Doc, where you go? Can't just run off and leave me.
I'm sorry, I had it on mute.
That's all right. Hey, have you ever been to the ranch market?
I have not. Looks cool, though.
I go there every Wednesday because on this little grill, oh, you can't see the grill. There's a grill. The man makes chickens, and you can get a chicken, big stack of fresh tortillas. They make them on premise, and salsa made on premise for $6.
Wow.
You can get 2 for 10. We got 2. Yeah, and it smells like old Mexico in there. So, I mean, I'm not saying I hope to offend anybody with that, but it's just true. Now, but wait, there's more. I just got to find the more.
Was it, did give you half a chicken?
No, you get a whole chicken. You get 2 whole chickens for $10. It's a good deal.
Are you serious?
I'm very serious. I do not joke about chicken. Now, I got to find my other email. Hang on. Because a guy like me, he's got a lot. Come on. I'll just open it up again.
I have to tell you a story about feeling like Mexico.
I'm headed down on, I think it's the 17th. Some friends of ours that we met, oh gosh, back in 98. They were missionaries. They're from Oklahoma. They were missionaries down in Puerto Penasco. My wife and I happened, it's a long story, I won't go through all that, but we just happened to meet them on a Sunday morning when they were holding church in this back room at the Best Western. They had just gotten there. They didn't really know anybody. We developed a friendship that has spanned the ages. They've built a church there now. They've got a huge, it's incredible. And they're practically retired back in Oklahoma, but we're having a big meetup. I think it's the 17th, if that's a weekend, to celebrate all that God has done over these last, I can't even believe I'm about to say it, 20 years? I can't believe it's been 20 years since I met these people. They had such a positive impact on mine and my wife's life. It's just incredible. Really the hand of God moving in our life. It was. Okay, you know, typically email, it's not this difficult. Okay, go to the sent folder. Just find it. Got it. Okay, so I go into the ranch market. I'm fully focused on chicken. I had a webinar to do, so I had to get the chicken and get home. So my daughter and I, and as I'm passing, you know what a Coinstar machine is? Where you take your piggy bank into a grocery store and you pour all the coins.
Oh yeah,
into
they give you money for it and they keep 15%. Yeah.
Okay. Read what's on the screen of the Coinstar at the ranch market. Can you see it?
I'm looking. Hang on.
Let me point my mouse at it.
Buy Bitcoin.
Imagine a child, a mere child, wanders into the ranch market, tips his piggy bank into the trough, and the machine will spit him out a certificate good for redemption at the cashier for, you know, folding money, dead presidents, or the machine will spit you out some Bitcoin right there.
Wow.
Insert cash now. So, I mean, even if you don't have any spare change, you can still walk up to it with the folding money.
I was wondering
Buy your
about that.
Bitcoin.
See, you can still do that.
Yep. Put your money in,
Wow.
out comes the Bitcoin.
Very cool.
Assuming they use a paper wallet for that. I know, yeah, pretty amazing. It really is.
That's funny.
Yeah, let me send
I got to
the.
tell you my
go ahead.
seems like Mexico story. You're talking about that place, you know, made you feel like you were in Mexico. I was at Epcot, and I was in the Mexico pavilion, I guess they call it, and it's very, very realistic. They bring over Mexican college students for a year, sort of like an exchange student kind of thing, and so it's real Mexican people waiting on you, just like in France and so on in Epcot. And they had to be walking past the water fountains. You know, there's Mexican music playing around us, the smell of the Mexican food from the restaurant.
Mm-hmm.
Yeah, it just felt like you're in Mexico.
It's festive. I'm telling you, going to the ranch market every Wednesday, I look forward to it because I leave there with a smile on my face, a little pep in my step, and a couple chickens under my arm. So
Well, I got a good laugh out of this one.
next time I'm going to leave there with some Bitcoin just to prove I could do it. So
Just to do it, right?
just to do it.
So here we are in this Mexican smelling, sounding, tasting music atmosphere. And this lady's about to lean down and get some water from the water fountain. And just on a whim, I said, I wouldn't do that. She looked at me, she says, no, why not? I said, well, you know what they say about the water down here? She says, oh, yeah. And she turned around and walked away. She didn't get a drink of water.
You know what? Disney is so realistic that maybe they would do that. Put a little Montezuma Revenge in the water fountain to give you that real authentico experience.
Yes, sir.
Hey,
I
you
have a
want the
blast
charts?
down there.
Yeah, go ahead.
I'm sorry.
Tell me.
I have a blast when I'm down in, actually over, because I don't live that far in any of the Disney places, because I do a great Donald Duck. I can sing like a duck, sneeze like a duck, laugh like a duck.
Can you
and
walk
I
and
just
talk
have a
like a
blast.
duck?
Oh yeah,
Then
I
you
can
must
waddle.
be a duck. Right?
So I always turn off the lights too. I always wear my Donald Duck t-shirts, and I just have a lot of fun. I really do. So I do have a video for you when you're done with your show and tell here.
This is Rocky Point. This is where our mission is in Mexico. Old Port, Playa. Looking to see if the hotel that we're going to stay at. It's just a great place. I love it there. We used to go when we first discovered Puerto Penasco. It's the closest ocean to Phoenix. It takes you 4 hours to get to the beach from door to door. We had a little trailer there on the beach. Then we bought a piece of property, raised up a Mission La Gracia. It's still there today. In fact, our Mission La Gracia, was home to the first Young Life official group in all of Mexico. True story. And the kids are still there having a great time today. I was just looking, it's kind of generic pictures, but anyone in the Phoenix area, if you've never been, Cholla Bay. Now this is where the diehards get their places. They didn't have electricity forever, and I think they now have it. I always thought I would retire there, but yeah, who knows? It's when my wife and I discovered it in the late 90s, it had already been discovered prior to that, but when we discovered it, it was a sleepy little fishing village. And then, bam, the real estate boom hit the U.S., and it trickled right down south of the border. And that place came alive like, oh my goodness, it's like you were at Disneyland. You thought you were in the Mexican pavilion at Epcot. I mean, it was incredible. All of a sudden, these high rises are going up, condos and every kind of thing imaginable, houses being built on the beach. It was amazing to watch. And then when the downturn came, 2007, 2008, you can only imagine. It went back to being more than a sleepy, because the people there had a taste of, I guess you'd call it the good life, where everybody had a job, everybody was making money, they had disposable income, right? Their income didn't come from other people's disposables. And that was kind of a big thing. So they were handed this, and then all of a sudden, no fault of theirs, it was snatched back.
So it went from a sleepy village to a comatose village.
Yeah, it really did. Now it's, like the real estate in the U.S., everything's coming back, and it's doing great. So anyway, anybody that lives in my neck of the woods, you should go here if you haven't been. And let me pass you the screen. Okay, there it comes.
All right, let me show you my PowerPoint. So, who on the call has heard about LEAPS?
How about telling us what it stands for? Because Michael and I were debating earlier what it stood for. We never did figure it out.
Well, first of all, there's no such thing as a leap. I hear people say, well, I bought a leap, or I got 2 leaps. No, they're all leaps because it's an acronym. It stands for Long-Term Equity Anticipation Security. Okay, so it's a LEAPS. And some people describe it as long-term options.
That's what Michael, that was his. I said, Michael, you want to tell the folks what LEAPS are? He said long-term options. I pretended like I knew, right? You see what I did there? Okay.
Of course. So let's just do a quick review of options. I'm sure a lot of people on the call have traded options of one kind or another. But on the risk scale, we go from, high risk speculation all the way down to conservative and low risk, different types of investments. Actually, the pyramid here is not quite accurate because short options are even riskier than long options. But that's not really the subject today. I just thought I would correct the graphic because I'm going to make a PowerPoint, but I'm not good at making graphics. So just a quick review of what options are. A lot of people think the options are designed for speculation because people speculate with them. They trade them. It's, you know, like trading Bitcoin or Ethereum or something like that. But actually, they were created for protection. You got to remember, way back when I first became a stockbroker, I was around for the very, very first leaps, and options were still pretty young when I became a broker. And so they were designed to protect your portfolio, and then people figured out how ways they could speculate on them. So the two key things to remember
Now,
about
could you get quotes on those on your ticker tape?
Oh yeah,
Oh, okay.
yeah, absolutely. So somehow I got paused there. Okay. So you see in the screen it says
I see it. Options created for protection, not for speculation.
Okay. So here's the two key things to remember about options, because everybody's options are so risky. Well, yes, there's a higher risk of a percentage loss. Okay. More likely that you will lose something in an option than in a stock, for instance. But your risk is mostly as a percentage of your what you put up. But you actually have a lower risk of dollar loss. Give you an example. You could buy a long option that expires next month, and if it expires worthless, you've lost 100%. All right, but you may have only put up $100 to buy that option, and if you bought the stock and the stock dropped 50%, you could have lost $500. Okay, so that's why I like options. Yes, you could experience losses in them, but not nearly as much in the way of dollars, which is what really counts. Okay, so there are dozens of types of options, but essentially there's only two types of options. It's just like technical indicators. There's really only two types of technical indicators, right? There's price and volume. You could argue that time is also part of that, but all these fancy different technical indicators, they're all made up of some combination of price action, time, and volume, right? So all these fancy options they have are really just some kind of combination of puts and calls. Now, I know this is a family-friendly show, but I have to give a little warning here. It's for mature audiences only because options are kind of sexy. You could have naked options, you could have spreads, you could have straddles. So there's all kinds of things that you might not want your children to hear about. That's a small joke. Not a very good one, actually. Okay. 2 rules for options. And I know a lot of people disagree with me on it because you can make more money when you win if you don't follow these rules. But you will lose money much less frequently. So I would rather make a little less and have less risk. And if that's my goal, my 2 rules are buy lots of time. Buy as much time as either A, you can afford, or B, is available. Or you're buying enough time to be right. And if you're a seller, you sell as little time as possible. There's another basic principle of options. Everything is opposites, right? So if you're just looking at technical indicators for anything, if something's going up on big volume, that's a good thing, right?
Right.
And if it's going up on small volume, the opposite,
right,
that's a bad thing. If it's going down on big volume, that's bad. You can expect to keep on going down. But if it's going down on skinny volume, then this might be a buying opportunity. So really everything in the markets is opposites. So if one rule is true, it makes the other one true as well. Buy as much time as you can buy enough time to be right. And if you're a seller, then you sell as little time as possible. I learned this the hard way. I had about 25 grand into various different call options that all expired within 30 days. You remember when the Asian contagion first hit us here in the United States?
I do.
Well, before that, we didn't really care that much about what happened in Asia, or for that matter, in Europe, right?
That's
we
correct.
Didn't, we didn't get up before the market opened and start studying how the markets closed in all these other countries. Who cared? We're America, right? They didn't really affect us that much. But then all of a sudden, we had the Asian markets just fall apart, and the next day our markets fell apart, and we found out that the world was interconnected. And every single one of my options expired worthless. So I lost 25 grand. If I had bought 6-month options, because the market came back pretty quickly, if I bought even 3-month options, I would have gotten out even. If I bought 6 months options, I would have almost tripled my money. Okay, so my time. And if you're a seller, then you want the options to expire. So you sell as little time as you can get away with. All right.
Okay.
Moving right along. Now, this is
Now,
just a quick
selling
review.
options, is that advisable for the novice?
Well, the novice probably wouldn't be allowed to sell options.
Because selling options comes with unlimited risk, correct?
Yes,
Okay.
it does.
All right, and maybe I'm getting ahead of you, so I apologize. Go ahead.
No, that's fine. I like the fact that we understand the same things and we can talk about things rather than me just yakking on. Now, right now, we're just quickly reviewing options. We're going to get into to leaps in a minute, and I just want you to see the similarities and the dissimilarities. So, the strike price is the price that you're buying, so to speak. So let's say we're going to keep real easy numbers. Let's say a stock's at $100, and you buy a $100 call. Okay, that's your strike price, and you're at the money because you're buying an option that says it's going to go to the price it's currently sitting at, right? Now, if you buy a strike price of 105, that means you're betting that that stock is going to go up $5. And if it does, you get rewarded. That's an out of the money strike. If you buy at 95, that's in the money. Now, which do you think you're going to pay the most for?
In the money.
Of course, because you're betting it's going to go to 95. It's already $5 above 95. So you're going to pay that $5 for the in the money portion, and then you're going to pay whatever time premium is on it. If you buy at the money, you're not paying for any in the money, obviously, but you're going to pay strictly time premium. And if you buy the 105, you're going to get a discount. Your time premium is going to be cheaper because it's less likely that it's going to go to 105 than it is that it's going to go to 100. So this is already at 100. Okay. Now, at this point, it's pretty much like buying stocks. I mean, I could buy a stock at $100 because I hope it's going to go to 105. But stocks don't expire unless the government gets involved, like General Motors, and it expired. Right. But in general, stocks don't expire. All options do. And there's a lot of confusion about this because the maximum time amount you can buy an option for is 9 months. They all expire on the third Friday of each month. So sometimes you can't even get 9 months, depends on where you are in the month.
Right.
But options are also sold in cycles. There's cycle A, B, and C. And so you would think if I could buy a 1 month option, which you always can, you always buy a 2 month and 3 month. And if there's a 9 month one out there, then I should always be able to buy a 4, 5, 6, 7, and 8, which is not the case. They put out options as the demand is there for them. So you can't always choose the month that you want. So just choose the longest that you could get. Because when the third Friday of that particular month that you chose comes around, that option is either worthless if it's at the money or out of the money, or it expires and you get however much it's in the money. But it does expire. Okay. Now, next term is premium. What do I pay for all this? You know, I've got the intrinsic value of how much the option's in the money. I've got the extrinsic value of how much time I'm paying for. And for that, I pay a premium. And we already described why you pay more or less for certain things. So that's your cost. Do you get your premium back? No. Just like buying insurance. Insurance on your car, your house. Nobody's going to give you your premium back. When the option expires, your premium is gone. Now, you may get your premium back included in the money you sell the option for if you've bought it right and bought the right time and so on. But you don't ever actually get the premium back. And then there's time decay. Okay. And by the way, those of you that don't trade options on stocks, do you guys ever trade options on commodities, Dwayne?
We don't know. No.
Okay. But you can.
You can.
Okay. So that's another way of trading commodities. Let's say that you want to get involved in buying a certain commodity, but you don't have the money for it. You can buy options on that. Okay, so the fourth principle is time decay. And if I buy that 9-month option, and now it's 3 months before expiration, but the strike price has stayed exactly the same. It's the underlying is called the thing. Options are derivatives. So the underlying is the item that it derives its price from. So in this case, it's a stock. It could be an Emini. But if the underlying hasn't changed at all, which is extremely unlikely, but to understand this, hypothetically, it's still at $100, your option is going to be worth less. You can sell it for less. Why? Because you used to have 9 months, and now you only have 3 months. So the time that you paid for, the extrinsic value, is decaying. It's going down. Okay, we'll start moving faster here. All right.
I'm here.
Yeah, I just hit the wrong button. Sorry about that.
No.
Okay. Which is riskier, options or stocks? Do people like type in their answers there when
sometimes.
When we're talking? Well, let's ask them. Which is
by and large,
riskier?
people are apathetic, and so they don't. It's kind of like it's just kind of like at church when the preacher asks a question, and it's like yes or no, or it's a two-part question, and nobody raises their hand.
I know. What is that?
Yeah, I don't know.
I was in a church one time, and their preacher was talking about, going to heaven and so on, and he said, "How many people here want to go to heaven? Raise your hand." And old Deacon Jones is snoozing in the corner, and he didn't raise his hand. And so the preacher hollers at him, "What's the matter with you, Deacon Jones? Don't you want to go to church? Don't you want to go to heaven?" And the deacon's a quick thinker. He says, "Oh, yes, Pastor, I do, but I thought you was getting up a load for right now." Okay, so which are riskier? Has anybody put in their thoughts, options or stocks?
I got nothing.
No, we'll ask Dwayne.
Tom, I got nothing.
Well,
come on, guys, wake
your
up.
Opinion.
Ask me again.
What do you think? Riskier, options or stocks?
Options, because they expire.
Okay. Well, I tell you what, this thing is really messing with me today. Give me a second again. I don't usually have this problem with PowerPoints. Okay. The answer is yes.
Okay.
Okay.
All right.
They're both riskier. This is a hypothetical, but I've seen exactly the same thing happen. And we're going back to using our stock price at $100. So let me see if I can get my little pointer thing.
I see your pointer. It's on the right side of the screen in the black.
Okay. All right. So.
Oh, you're looking for that pointer. I got you. I got you.
Here we have our strike price at 100.
Mm-hmm.
Okay. Now, the stock owner at this point hasn't made anything. If he bought it at 100, it's still 100. He hasn't made anything in dollars or as a percentage.
Mm-hmm.
So it's a 0-0. Same thing with the options owner. Okay. Now, the stock's at 100, and we're saying the option's buying a call, and he pays $5. So if the stock goes up to 105, the stock owner makes $5, but he's only made 5%. The option owner has made $5, but he's made 100%. He just doubled his money. Is that
That's
cool?
right. That's cool.
Okay. Now, stock goes to 110. Stock owner makes $10, but he still made roughly the same, 10%. He went from 5% to 10%. Not a big return. The option owner who paid $5, his option's now worth $10. He's made 200%. But how many people know that things go both directions?
Mm-hmm.
Okay. So when the stock goes down to $95, the stock owner loses $5, but he's only lost 5%.
Correct.
The option owner, when it goes down to 95, he also loses $5. His whole amount of money, he's lost 100%.
Mm-hmm.
So poor option guy, right?
Right.
But now let's take it a little farther. Stock goes down to 90. Stock owner loses $10, 10%. Look at what the option owner's lost. It's the same. He can't lose more than $5 because that's all the money he put up. So he lost 100%, but it's only $5. Same thing with $85. If it goes all the way down to 50, if the stock drops in half, the stock owner loses $50. He's lost 50% of his money. The guy who bought the option has still only lost $5. He lost 100% of his money, but he's only lost $5 or 1/10 as much as the stock owner. So remember what I said earlier, that with options, you have a bigger percentage loss, okay, but a much smaller dollar loss, $5 as opposed to $50 in this example. So you can see why options and stocks both have risk, but different kinds of risk. Okay, so here there's a different example. It's a $50, whether it's a put or a call. We haven't really discussed puts or calls yet, but let's just say that both of them exist. If you buy a $50 strike, that's at the money for both a put and a call. If you buy a $55 strike, if you're buying a call, that means you're betting on it going up. That's out of the money because it's not at $50 yet. But if you're buying a put, you're betting that it's going to go down. You're $5 in the money. Do we see that?
Got it. Got it.
Okay. And again, everything's opposites in the markets. So if I buy a $45 call, I'm $5 in the money because it's already $5 above my strike price. But if I'm buying a put, this is all buying now, no selling. I'm buying it out of the money put because I'm betting it's going to go down to $45, but it's still at $50. Okay, Moving on. Tell me if you're not seeing what I'm describing
I
to you.
went to, you were on the right screen there, and now you're on Leap's summary.
Yeah. I think I know what's going on. Can I change what I'm sharing?
Sure.
How do I do that?
Oh, do you need me to take it back?
Yeah, take it back just for a second.
I'm not a PowerPoint guy.
Oh, wait a sec. I'm just going to share my screen, period.
Okay.
That should solve the problem. Clean screen. Okay. Now, I can go back to full screen. We will be all set. Hate it when this happens.
Yeah, I wish I could be of assistance. Just not the PowerPoint guy.
Yeah, no problem. I do webinars all the time, and I never have this.
What about if you just hit F11 on your keyboard?
F11, what's that for?
Full screen. Keyboard shortcut. Just tap F11.
Yeah, on Windows it's F5.
On my Windows it's F11, but anyway.
Oh, really?
Well, I mean, if you're using Microsoft Explorer, maybe to take that full screen is F5, but for me everything's F11. So anyway, okay.
Okay, so are you seeing now
I'm seeing the at the money call and put.
Okay.
Now I'm seeing time decay OTM options.
Okay, so this is time decay on out of the money options. If it's out of the money, time's going to decay even faster. If it's in the money, the market will be a little nicer to you because it thinks that you've got a better chance of it being where you want it to be. But you can see 90 days out, if I paid $2 for time, by 60 days out, it's only worth 160. By 30 days out, it's worth $1.20. And by expiration, it's not worth anything. So,
covered calls.
Covered calls.
Mm-hmm.
Okay, good. I think I solved the problem. Covered calls are a neat way to make money. When I was a broker, I had a lot of clients who were older people who owned stocks that they'd had for years. In a lot of cases, they'd made big profits in them, and they didn't want to sell them because they had to pay the taxes. In other cases, their grandfather or their father or their dead husband or whatever had given the stock to them, willed them to them. Mm-hmm. So they felt an emotional attachment to them. By the way, it's never good to get emotionally attached to any investment.
Never fall in love.
Right.
Not with a stock.
But I had to deal with the fact that sometimes they were in love with them. They weren't going to sell them. So how could I make them money, especially if the stock wasn't going up? Well, I could sell calls against them. I could sell an option to someone who believed that stock was going up. It doesn't matter what the reality is. It just matters if somebody believes it can or they're willing to bet that it might. Okay? So, again, simple example, $100 stock. I sell a call for 105. And remember, I'm a seller now, so I sell as little time as possible. So I try to sell a 30-day or a 60-day or whatever I can get away with and get as much money as possible. So let's say I can find somebody dumb enough to give me $5 for a 105 call. That gives him the right to buy that stock from me at $105, which doesn't sound like a great deal, does it?
Mm-mm.
If he bought it today, he'd pay $100. Mm-hmm. He gives me $5 for the right to buy it at 105. So if it does go to 105 and he buys it from me, he's paid $105. He didn't gain anything.
Right.
But what if it goes to $150? he still has the right to buy it from me for 105. So that's why people do it. Okay, there is actually a method to the madness. Covered calls are a nice income generator. What I did for a lot of my clients was make them 5% a month on average, selling calls against stocks that they didn't want to sell. And so I made sure that I sold them in such a way that it was unlikely that they would get called away, as it's called. All right. But if they did, we could always just buy it back. Now, some people say that covered calls are a negative strategy. In other words, you're betting on the stock going down. They're actually a neutral strategy, because if I just sold calls naked, as it's called,
That's what I was referring to earlier, the naked calls. Yeah, go ahead.
Right. If I didn't own the underlying stock, then that would be a negative strategy. I'm selling the calls because I believe I'm going to get to collect the money for the call, and I get to keep it all. So cover calls are actually a neutral strategy, because you own the stock because you're bullish on it, but you're slightly bearish in that you're selling a call. But the other nice thing about it is that it lowers the cost basis, and that's important tax-wise. Okay, now I've heard a lot of brokers and teachers say that you cannot lose money on selling calls, that it's a totally safe strategy. That's not true. Okay, you can lose money on them, and the way that would happen is if the stock goes down dramatically. Remember, we said it was a neutral strategy. So if the stock just really falls out of bed, then you can't sell the stock because you sold a call against it. Somebody has the right to buy that stock for a certain period of time. It's sort of like renting out your house. You know, you can't just rent the house and kick the people out, or sell the house and kick the people out if they paid you rent for it. So in order to sell the stock, they first had to buy back the call that they sold, and then they could sell the stock. In the meantime, they could lose money. But it's a relatively safe strategy because that doesn't happen very often. Okay, married puts is something that's not done very much, but it's a neat strategy. It's an insurance policy. It's bearish, but again, let's say you've got a stock and you don't want to sell it for whatever reason, sentimental, or you don't want to pay the taxes or whatever, but you have a feeling things are going down. You're bearish on the stock. So it's a bearish strategy. You buy a put on it, and it's a married put. So if I own, you can only, in general, buy puts and calls in lots of 100. So if I buy one put, it's a contract for 100 shares of stock. So for every 100 shares of stock, I need to buy a put. If I have 500 shares, I buy 5 puts. It's pure cost. I'm not going to make any money on it. Okay, but I could mitigate the loss on my stock if the stock goes down. And if you sell them right, every dollar that the stock goes down, your put option goes up. So you see, it's a good insurance policy. But you got to remember, it's pure cost. If the stock doesn't go down, you lost that money. Just like paying the premium on fire insurance for your house if your house doesn't burn down. I'm not going to go through all this. If anybody wants to know how options work, just look up how options work on the internet. But I want to get into leaps because that's our subject for today. As I mentioned at the beginning, they're long-term equity anticipation security. So they had to stretch it a little bit to make anticipation into 2 words to get a good acronym. All right. There are some differences between options and leaps. That's why you can't accurately describe leaps just as long-term options.
Okay.
But there are There are similarities. Think of houses for a second. Think of buying, renting, and leasing. Okay. If I buy a house, I made a big commitment, right?
Correct.
If I rent a house, I'm making a small commitment. If I lease a house, it's sort of in between, right?
Right.
I have agreed to live in that house for a longer period of time than a rental, but I'm not making as big a commitment as buying it. So it's the same way with the securities. Buying a house is like buying the stock. Renting a house is like buying an option because I've made a short-term commitment. Leasing a house is like buying a leap. Okay. So in this case, less is more. I like leaps because they're an in-between. Options are frankly too risky for most people. I'm going to recommend an article at the end that everybody should read, and it will help you with any kind of investing because it shows you how to get good at what you're doing before you put money at risk. But when you compare leaps to stocks, less is more. They're less costly than a stock. Okay, so I've got less money at risk. But they also have less leverage than an option. Okay, so that lowers my risk. So less is more.
Less is more. Sometimes less is more, and there are times when less is just, well, less. But
that's true. Leaps were introduced by the CBOE in 1990. I was a baby broker then. I'd gotten into as a stockbroker in the late 1980s. And so I was actually one of the very first brokers in the country that traded leaps because I was an options principal. So I got the opportunity to do it before most people did. With leaps, you're thinking in terms of years instead of months. Remember I said the least you buy an option for is 30 days, the most is 9 months. Well, with leaps, you can go up to 3 years. So that opens up a lot of different possibilities. You could think of this as a conservative type of option. Okay. So, what could you buy leaps on? Well, you could buy them on equities, stocks. You could buy them on indices, the S&P, the Dow, whatever. You can buy leaps on interest rates. Just about anything that you could trade in one way or another, you can buy leaps on them. They're designed for people that take a longer term view of the market. I don't care so much what's going to happen in the next 30 days. I just think that long term, if such and such happens in politics or whatever, the market's going to go up. So I might buy leap calls.
Well, being able to say that the S&P 500 will be higher than it is, the price will be higher than it is today, 3 years out, that's kind of a no-brainer. We're talking shooting fish in a barrel here.
Okay.
Because the S&P
So
500 is a best-of-breed index. It is designed to go higher over time. That's all it's done since the beginning. It's 500 large-cap companies that have to meet a pretty lengthy list of qualifications to be included in the S&P 500 index. And let one of them miss their earnings a couple of times, start to limp a little bit, they get kicked to the curb, they bring in a nice, fresh, young bull, and we're off to the races again.
So, if that's your view of the market, and you believe the S&P 500 is definitely going to be up 3 years from now, you would buy a leaps or several leaps on the S&P 500. However, if you're correct and the S&P 500 is up, there's still going to be a lot of stocks that will be down, right?
There'll be, well, the advanced decline line says there'll be more advances than decliners if the price is higher.
Right. But there will still be stocks that are down.
There will be some stocks that are down, sure. Absolutely.
There's stocks that are removed from the S&P 500 because they're performing poorly, and like you say, replaced with a stronger stock.
Yep.
So if you're looking at a particular sector, let's just say that you have some inside knowledge that solar panels are going to drop. Okay, that something much better is coming out, and it's going to just kill the solar panel market. Then you might want to do a put on that, either that
Particular
index,
sector. I got you.
sub-index, or stocks within it. So the basic thing is that you're taking a long-term view of the market, but the beauty is that you can also trade them short-term. So let's say I've
So
got
you buy it long-term, but you can trade that long-term purchase you just made short-term. Is that what you're saying?
exactly.
Okay.
I could buy a leaps on the S&P 500, to use your example, and I could buy it today, and then tomorrow we get news that some huge event has happened and the stock market just zooms. I could sell that leaps tomorrow and make a nice profit.
Okay.
Or I could sell it in 30 days or whatever. So it's sort of best of both worlds. So you could use leaps if you're a bull. You could use leaps if you're a bear, or if you're just not really sure and you want to hedge your bets. They're good. Just like some people use
Long the
options.
stock, short the leap.
Yeah,
Okay.
absolutely.
Got it.
Now, I mentioned earlier there's two types of options. Well, look, this is exactly the same slide as before.
Right.
Okay, I did that deliberately because there's two types of leaps as well. There's calls and there's puts, and the rules are the same. Buy as much time as you can. So if you can afford to buy a 3-year leaps, do it. You know, if you can only afford to buy 2 or 1, then do that. And if you're a seller, then you sell as little time as possible. There's a lot of similarities. Here's the differences. Strike prices are going to be way different. Remember, options are traded a whole lot more than leaps are. So the exchanges meet the demand. If there's demand for strike prices $20 below the stock price and $30 above, they'll have them all there. Okay, but with leaps, there'll be a lot less selection because they're just not traded as much. The expirations we've already talked about. We're not talking about months, we're talking about years. And they only expire once a year also. So that's another big difference. All right. So they expire on the third Friday, like regular options do, by either December or January. And the premiums are going to be much different. If I buy the longest term option I can on a stock, 9 months, at the same strike price, I'm going to pay a whole lot more if I buy a 3-year strike on a leaps.
That makes sense.
Okay. But on time decay, time is on our side. Okay. That same chart that I showed earlier, the leaps will decay a whole lot less because, yes, let's see, even after a year, it will be lower, but it's not going to go down precipitously because people know that there's still 2 years left for it to turn around and go back up. So it's all based on your guesses and your expectations. But time becomes your friend more with a leap than with an option. If you bought a 6-month option and you're down to the last 30 days and the stock is down, you are chewing on your fingernails because you're about to lose all your money. Okay, so as I said, leaps all expire in January, February, but they also do something called melding, which is not a stock thing. Okay. One day, I had a lot of leaps, and every morning I would go into I was a branch manager at the time, I'd go into the office and I'd look at my portfolio. And there's one section for my equities, another section for my leaps, another section for my options. And I noticed that about a third of my leaps had disappeared. And I'm freaking out, right? I didn't know about melt. Where were they? Where are they? But before I picked up the phone and called Prudential Beach up and started screaming and yelling, I looked down and I saw I had more options than I'd had the day before. Remember that I said that options trade in cycles, A, B, and C?
You did.
So about a third of the stocks will be on A and a third on B and so on. And so as the options become available, let's just say we've got 1A, 1B, and 1C. One of them I'll be able to buy a 9-month option. Another, the only thing I'll be able to buy is an 8-month, and the only thing is a 7-month. Because they don't want everything expiring all at once. It would just screw the markets up.
Right.
So what happens is that melding takes place with leaps, and they're on the same thing, the same cycles. So in either May, June, or July, if you had an even distribution of leaps, a third of them would meld. That doesn't mean they disappear. It looked like they did, but what happens is they then convert to options, sort of like a snake shedding its skin. It's no longer identified as a leap anymore. If it was a January 2020 leap, it would turn into a January 2020 option. And so I felt a great sense of relief when I realized that. All right, the symbols are going to be a lot different. You know, if anybody's traded options a lot, you know that the symbols are pretty much the same all the time. They're just the letters that refer to the month and the year are the same, are different, you know, to indicate the different option. But I'm trying to think of one. I haven't traded options in a while, but let's just say IBM, and the stem of IBM is IBM because it's a big company. Okay, then there'll be a letter following that would indicate the month, and another that would indicate strike price. Well, you can't use the same ones for leaps, so they just have to change the letters around. So you just have to get used to them. Okay, so a summary. Leaps are similar to traditional options. There are some important differences that we talked about. What you do is you're leasing stocks. You're getting control of that stock, but you're not paying near as much. On average, and this is just a very, very rough rule of thumb, a 3-year leaps is going to cost you roughly 20% of the price of the stock if it's a call. Now, if it's a very desirable stock, it could be more. If it's not, then it could be less, but that's pretty typical. There's less leverage in them, so that means less risk. And there's also less cost, which also means less risk. So they're less risky overall as a group than stocks or options.
So
I like them.
that 3-year leap that I just hypothesized here on the S&P 500 index, do you have any idea, or do you have an option chain there that you might show us what the cost of that would be?
I don't have anything like that. I should have thought of that, and I could have thrown it up there. But yeah, they do have chains.
I'm looking at the option chain for the spider, which is not really the S&P 500 index, but I guess in a way it kind of is. So I'm looking at an option chain. I've got composite, calls and puts, near the money, type, all types. Does it say leap, weekly, monthly, quarterly, SIBO?
Yeah, if you went to cboe.com, I think you could probably find, just type in leaps in the search area, you could probably find that.
Okay, going to SIBO.
I'm almost done here, so while you're doing that, let me just wrap up.
Sure, yeah.
And then we can get into a little discussion. Here's one way that you can make a lot of money with leaps. Remember I told you that I was making about 5% a month selling calls against stocks. You can't do this against all stocks. It will not work. It has to be a stock that's pretty steady and dependable, but that is well known. People like it, and so even if it's not going up, they're willing to buy calls on it. So what would you call it if I owned the stock, Dwayne, and I sold a call against it? Okay.
A hedge? No.
Yeah, or a covered call.
Right.
Okay. And I could do the same thing on a leaps. Okay. Now, some people refer to that as covered calls on leaps. It's really not, because in order for an option or a leap to be covered, you have to actually own the security. People have to be able to call that security away, and you can't do that. But let's say that instead of buying the stock at $100, I bought a 3-year leaps at $20, and I sold the same exact option that was bringing me 5% a month on average. How much would I be making now? 25%, right?
Okay. Yeah.
Because I bought it for 20% of the cost. Of course, it doesn't work out that way, or everybody would do it. That's just an example. Okay, if it's a really good stock, then you're gonna have a hard time making that kind of money on it. But the principle is there. I'm better off selling a call against a leaps than I am a stock. And then let me just give the homework. And this is, if you haven't already done so, I would strongly suggest that you go to ChristianFinancialConcepts.com and read an article there called An Investing Plan for Everyone. You just go to my website, click the articles link, and then look for this article. What it will do, it will show you how to get started in investing in a new asset class. So for people that are really good at trading stocks, and they think, well, I can sort of transfer that knowledge over to options. It's not necessarily so. You can be great at stocks and bust at options. So it shows you how to gradually get into trading anything new. Even if you've just been listening to Dwayne and you're thinking about getting started trading the E-minis, read his article, because it'll show you how you can ease into it and reduce your risk. And with that said, you can take back the screen, Dwayne, because I've gone through my PowerPoint.
Okay. Yeah, I was looking at some of these options chains, trying to isolate a leap. All right, I'm gonna have to look at it differently, but I'll show you guys tomorrow. I will show you a an option chain. I'll show you the price of what it would cost to be long the S&P 500 index 3 years out, and what the potential. Now let me ask you this: whatever the cost is to be involved in that leap 3 years out, S&P 500 index, at the end of the 3 years, let's say you hold it the whole time, is it more is the trade more profitable the higher the price is on the S&P 500 index, or does it max out at some point? I guess if it maxed out at some point, you'd just sell it then and not wait 3 years.
No, but it doesn't max out, just like a stock.
Okay.
You know, the most you can lose on a stock is the amount you bought it for, but the sky's the limit. There's a huge upside.
That's quite an attractive idea. I think I'll call my friend Bert. He knows everything and about options, and he'll tell me what that would cost. Okay. Bert, if you're in the audience, pop on. Yeah, let me see if I can roust him in Telegram. Bert, you here? All right. I don't. Let's see. Somebody's typing. That's not Bert.
Okay.
All right. But it might be somebody that has the answer to the question. Well, I see you typing. Keep typing. All right, let me take the screens back in the meantime.
Yeah, I'm looking for the options chain right now, which I couldn't do when I had the PowerPoint up.
Okay. I got the charts. Okay, guys, remember at the beginning of the show, we drew this little rectangle across here. Support, support. These are 30-minute candles, support. Support, hours. Support becomes resistance. And we were looking for this to be good resistance until it isn't. And so far, it is. And these windows of opportunity are still here beckoning. So keep that in mind. No, that particular message that was coming through Telegram was not regarding BERT or the leaps, but I will show you. If you got a second?
Sure.
And I'll show you what I did come up with here. I'm just looking at a Yahoo Finance page right now, and these are May 10th, 2019. How far does this go out? Let's see, December 17th, 2021. Let's go out there. Okay. Can you decipher in it? Because this is all Greek to me. So.
The chain itself?
Yeah, just what information is this conveying to us?
Okay. Can you scroll up just a tad?
Tell me when.
The other way. I want to see the top.
Oh, okay. How about
okay,
that?
So we're looking at calls. What is this on, the S&P 500?
This is in the money calls. Yeah, the S&P 5. Well, I punched in S&P 500. It brought me to the SPY, so that just might be the way you have to do it. You might have to use the SPY as a proxy for the cash index.
Yeah, I think so. Okay, so going across the screen there, you see the last print. The strike price is 105.
Mm-hmm.
The last price for that was 175. And then the bid and the ask are fairly tight, 187 to 190.
Mm-hmm.
And now this is where it gets interesting.
Wait a minute. The last trade went off at 175, and now the bid ask is 187, 190?
Yeah, but look at the volume.
Oh, there's one. Okay, got it.
Yeah.
Got it.
And open interest is one. There's somebody out there trying to buy or sell. We don't know which at this point. And then there's implied volatility, which would take a whole nother hour to explain, so we won't get into that.
Wait, these days have already passed. Why are they showing us?
Well, these are calls.
Gotcha. Okay, this is when they were initiated. Okay.
Yeah, these were calls for December 17th, okay, of 2021. So it looks like you're on leaps because you know what I'm saying?
Yeah.
There's no options that can expire in 2021.
This is the last trade date. Okay.
Yeah.
So if I scroll down, so here's a big number here. Open. Okay, there's a volume of 2, but open interest of 377 on this one.
Okay, so probably just by reading this chart, I would guess that the actual instrument is trading for 170 because you see all this open interest around that price. Okay, and so yeah, this is going to be expiring on the third Friday in 2021, so a year and a half from now. So that's definitely a leap. I don't know how you got to that, but you did. I was trying to find it and I couldn't.
Okay.
I used to have all the shortcuts to it because I traded them all the time. But take a look at the volume in the open interest columns. Those were big clues for me. Now I used to have like level 2 trading information, which I paid a lot more for, and it told me, you know, like for instance, these 377 contracts of open interest, it wouldn't tell me who the person was, but it would tell me that, bidder A was 30 contracts, bidder B was 77, and so on. So after a while, I would get to know who I was trading against. I would get to know their trading personality. I didn't know what their company was or what their name was, but I could identify them. And when I would see that I was bidding for the same contracts against somebody, I would know when they were likely to blink, right?
Mm-hmm.
So I could know how far I could push them. Like if they're selling and I'm trying to buy, and it's just like you see on all the law shows, the prosecutor and the defense, they're negotiating on the sentence, and the first one that blinks, right?
Exactly.
Well, I was doing the same thing, trading against anonymous people out there on the internet, but I kind of knew them. I knew their trading personalities, and I'd see this person pop up trading in a certain way, and I'd say, okay, well, I know how to work against this guy or lady, and that's where I got a lot of the information from. I keep trying to scroll up and down on your screen, and then I said, oh, it's not my
It's
screen.
lifelike, right? Yeah. Okay.
Right. It looks like the real thing.
Walmart, $350. 55 inches of digital madness hanging on the wall. It's true.
Well, as usual, I've gone over time a little bit here.
You have, but you know what? We enjoyed every minute of it.
Well, I'm glad.
Yep.
I always enjoy being on
Next
here.
Thursday, you want me to grab you 2 chickens? Or next Wednesday?
Yeah,
I'll
sure.
grab you 2 chickens next Wednesday. I'll bring them to the show Thursday.
Or I just bring them to Palm Beach.
That sounds
Don't-
real good. I thought of this morning when you texted me at the crack of dawn. But that's okay because I'm up because I run a 24/7 alert service called Logic 247 where opportunity finds you. So I was up and about. But I was thinking a lot of people today are going to wake up in a wonderland like Palm Beach, and they're not even going to go to the beach. They're not going to put their toes in the sand. They're not going to feel the waves licking up around their ankles, sun beating down on their pasty white skin. They're not going to do it. They could, but they're not. And see, those of us who live in the desert, we take exception to that. Because if we had a beach, you know where I'd be right now.
Well, I'm going to make you real mad then, because I would say it's probably been at least 10 years.
Oy vey!
to the
No! No way. Really?
And I live just minutes away. By the way,
you
don't
rascal.
forget to mention CFRNgold.com. We didn't talk about gold today.
We did not.
But
we may have
if
talked
you-
about a different kind of gold.
yeah, well, in a sense, making money is gold, right?
Anyway, he who has gold
but-
makes the rules. I heard.
Yeah, as I often say, because I teach a lot of traders that trade all different kinds of things. I teach about trading psychology. And I always tell them, trading is inherently risky, as anyone that teaches trading will tell you. And
We're
so
required to
you
by
might,
law.
I'm sorry?
I said we're required to by law.
Right.
God and man.
So it just makes sense that if you have a nice run, you made some good money, to pull some of that money off the table and to put it into something that's safe, like gold. If you put together the 2 things that investors are looking for, which are safety and profit, okay, there are other things that are, quote, safer than gold, like CDs, but they're only making you 1.5%. So with inflation, you're losing 3.5% a year. So it's not so safe. And there's things that are much more profitable, like Forex, where if you invest in certain countries, you can make 500 times leverage. So if it goes up and you're making hundreds of thousands of dollars, but you can also lose everything. But if you get the best balance between safety and profitability, it's always going to be gold. So we'll learn you how to buy it properly.
That's right. Come on down to our place. CFRN
Yep.
Gold.
And I will send you some very, very valuable information, as well as my contact information if you have any personal questions. But just the articles and the videos, the education that you find there will blow you away. If you go through the entire email, read the 2 articles, watch the videos, you will know more than 95% of the guys in this country that call themselves financial counselors. About gold, that is.
I love it when you talk like that. All right, Dr. Tom. It's been a great Thursday. Go to the beach, man. Take your lady friend there, and go to the beach. Put up a little parasol, an umbrella. You know what I'm saying? Enjoy the good life. You deserve it. You've worked hard for it.
All right. We'll give it a shot.
Thanks, Dr. Tom. Really appreciate you guys. Go to CFRNgold.com. And Dr. Tom, we'll see you next Thursday. All right. Bye-bye. All right. Here we are. Now, that little thing I showed you on the S&P 500 Emini Futures at the beginning of the broadcast, did that happen on the Dow also? You know, it kind of did. Thanks for asking. As I say. Let's go to it. Get to it, mate. Okay. So we said if the current YMM9, that's the Dow, pullback reaches 25940, consider being short 930 to 900, trail if possible. If you didn't get a piece of this, you're going to be ticked. You are. Okay. You ready? Price pulled back to 25,940 right here. And we dropped 400 points, 400 plus points. Leg and a retracement, a leg and a retracement, a leg and a deeper retracement. Okay. What's this? Support. Support. Come on. Resistance. If this resembles what we just looked at in the S&P 500, you're onto something. Okay. Now, what happens when we get back to 940? He asked. Well, we haven't got there yet. You got to get through this. We got to get up, hold it on a pullback, then we can go here. See that? Don't be shocked if this thing gets a leg to the downside before the close today. And if it doesn't get it today, well. And see what I said the other day about, don't worry about drawing the perfect trend line. I don't know that there is such a thing. Just draw them. Bert, speaking of Bert did a great video. He and I did one together. He mostly did it. I was just there for moral support. How to draw trend lines with Bert. That's the actual name of the video. You should call Bert, 866-928-3310, and ask him for the link to that video. It's good. He'll give it to you. No, he really will. Why, yes. Yes, it is time. Once again, good word for the day. If you have any questions, feel free to put them in the chat box. I put the link to last night's crypto webinar in the chat box. Feel free to go there, check it out. All right. Sometimes, and we talked about this the other day, sometimes we get all so caught up in our own head our own wants, needs, and desires that we totally lose sight of who and what we're called to be as Christians. We're actually, I've never been, now hear me out. I've never been happier than when I was totally consumed by someone else's wants, needs, and desires. Every time I come back around the mountain and get focused on my wants, needs, and desires, I just get kind of miserable. All the B vitamins in the world won't seem to turn that thing around. But if I can change my thinking, I can change my life. I can at least put it back on track where it should be. Imagine if Jesus had only been concerned with his wants, needs, and desires. Wow. What a mess we'd be in. But he was more concerned with us than with himself. He would rather die for our sins than watch us die for our sins. Now, throughout the course of our Christian life, we're going to run into some damaged people. In fact, most of us are damaged people. That's why we became Christians. We don't seek God on the mountaintop. Man has a tendency to seek God when he runs out of other options. It's at the end of ourself we find the beginning of God. So, when God takes us from that place of desperation to delight, like he does, then our minds should be fixed, not on our damage, because that's the past now, but those that God brings into our focus, into our sphere of influence. Those damaged people, they're not there but for one purpose, and that's for God to be able to speak to them, heal them through you. Me? Hey, if he could speak through the jawbone of an ass, just saying, right? Galatians 6:1. If a man is overtaken in any trespass, you who are spiritual, restore such a one in a spirit of gentleness. Not judgment, not condemnation, but restore such people in a spirit of gentleness. And so that's what this is about, restoring damaged people, part 1. We are too quick to criticize people because of what they've been through in life. In some cases, it's because of what they've done to others. And in some cases, because of what others have done to them. If you've been to a secondhand shop, you know that there are quality items at discounted prices. You just have to know what you're looking for. Jesus does. In his eyes, the down and out may be down, but they're not out. Peter's sorrow over denying Jesus ran so deep that he decided to go back to his old job as a fisherman. Imagine the gossip around the harbor. That's him, the guy who turned his back on Jesus. Peter eventually became the leader of the New Testament church. But be honest, would you have voted him in as your pastor or been willing to listen to anything he had to say? Yet the first person the angels mentioned by name after Jesus rose from the dead was who? Peter. He was specifically given a message direct from God. Mark 16:7. Why? Why Peter? Because God looks beyond our immediate problem and sees our long-term potential. I'm not going to judge you for who you are now. I'm going to celebrate you for who you can become in Christ. Jesus remembered the words he had spoken to Peter in Luke 22:31. Satan has asked for you. Now, there's something to think about. The devil asked for you by name. Satan has asked for you that he may sift you as wheat. But I have prayed for you that your faith should not fail. And when you have returned to me, strengthen your brethren. The foundational principle of practicing medicine is, first, do no harm. When someone is damaged, don't damage them further. Don't judge them. Don't condemn them. Chances are they know what a screw up they are. And they just desperately want to get better. Need to get better. And you who are spiritual hold the keys. Love them, pray for them, and seek to restore them. And that's our good word for the day. Tomorrow, part 2. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell. Can we get a new bell in here? Thank you very much.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.
Wide awake while the world is sound asleep, and too afraid of what might show up while you're dreaming. Nobody sees you. Nobody will believe you. Every day you try to pick up all the pieces, all the memories that somehow never leave you. Nobody sees you. Nobody will believe you. God only knows what you've been through. God only knows what they say about you. God only knows how it's killing you. But there's a kind of love that God only knows. God only knows what you've been through. God only knows what they say about you. But God believe you. God only knows what you've been through. God only knows what they say about you. God only knows how it's killing you. But there's a kind of love that God only knows. God only knows what you've been through. God only knows what they say about you. But God only knows the real you. There's a kind of love that God only knows. For the lonely, for the ashamed, the misunderstood and the ones to blame. What if we could start over? We could start over. We could start over. Oh, for the lonely, for the ashamed, the misunderstood and the ones to blame. What if we could start over? We could start over. We could start over. 'Cause there's a kind of love that God only knows. God only knows what you've been through. God only knows what they say about you. But God only knows the real you. There's a kind of love that God only knows. God only knows what you've been through. God only knows what they say about you. But God only knows the real you. There's a kind of love that God only knows. God only knows where to find you. God only knows how to break through. God only knows the real you. There's a kind of love that God only knows.